Gold is supposed to be safe. When things get uncertain, gold should go up, right? But here's something that confuses a lot of people. Sometimes, gold falls, even when the world feels unstable. And here's the weird part. It often falls when the US dollar gets stronger. Now wait, why would gold drop just because the dollar goes up? That doesn't seem obvious at all. But once you understand this, everything about gold starts to make sense. So let's start very simple. Gold and the dollar have an opposite relationship. When the dollar goes up, gold usually goes down. And when the dollar falls, gold usually goes up. But why? Here's the interesting part. It's not random. There's a very clear reason behind it. This is the key idea. Gold is priced in US dollars. That means no matter where you are in the world, you buy gold using dollars. Now think about this. If the dollar becomes stronger, it means other currencies become weaker compared to it. So for people in other countries, gold suddenly becomes more expensive. Same gold, higher price. And what happens when something becomes expensive? People buy less of it. That's called lower demand. And when demand drops, price drops. Simple. Let's make this even easier. Imagine you live outside the US. Yesterday, gold was affordable. Today, the dollar gets stronger. Now gold costs more in your currency. So what do? You wait. You don't buy. And if millions of people do the same thing, demand falls globally. And when demand falls, gold prices start going down. But wait, this is where it gets even more interesting. It's not just about gold getting expensive. It's also about where money is going. When the dollar gets stronger, investors feel safer holding it because the dollar is seen as one of the safest currencies in the world. So during uncertainty, people don't just buy gold. They also buy dollars. And here's the problem for gold. Money is limited. So if money flows into the dollar, it has to come from somewhere. And a lot of times, it comes out of gold. Now think of it like this. Gold and the dollar are competing. Both are seen as safe, but they work differently. Gold equals store of value. Dollar equals liquid, easy to use cash. So when investors want flexibility, they choose dollars. And when they want long-term protection, they choose gold. But in the short term, the dollar often wins. Here's why most people get confused. They think uncertainty equals gold goes up, which is true, but not always. Because there's another factor, the dollar. If uncertainty makes the dollar stronger, that can actually push gold down. So now you have two forces, uncertainty pushing gold up, strong dollar pushing gold down. And sometimes the dollar wins. Smart investors don't just look at gold, they look at the dollar too. Because gold doesn't move alone. It reacts to currency strength, interest rates, global demand. So instead of asking, is gold going up? They ask, what is the dollar doing? That's the smarter question. So now you get it. Gold doesn't fall randomly. When the dollar gets stronger, gold becomes more expensive for the world. Demand drops. Money flows into the dollar, and gold falls. Simple, but powerful. Now the next time you see gold dropping, don't panic. Just ask yourself one thing. What is the dollar doing right now? Because that one question changes everything. If you want more simple, no confusion breakdowns like this, subscribe, because once you understand the basics, the market starts making a lot more sense.